Hello, everybody. Thank you for coming. As Armando mentioned, I'm going to talk today about extracting themes from unstructured data. So I'm going to take a little bit of a step back and actually cover partly some of the things that Nick has already covered, in that I will talk about some of the key attributes that defines a big data analytics data set. At least from when looking at it from a news perspective or a RavenPack perspective. I'm also going to talk a little bit about some of the applications that we are seeing out there in the marketplace for our data. And then I'm going to move on to talk about the thematic approach to using unstructured data, which we believe is a key angle to getting rid of some of the noise that you will see in those type of data sets. I'll then move on to a simple use case based on some of our internal research. And I'll talk about some of the things that we have planned as part of our internal research agenda to further go down the route of what we call thematic alphas. And finally, I'll also give a little bit of a view into the future of RavenPack and how some of our upcoming developments will further support this thematic approach. But first of all, just a quick definition of what big data analytics is really about. Well, RavenPack is really focusing on the unstructured part, as you have heard before, and turning unstructured data into a structured data feed analytics that can be used more easily by financial firms in different trading or investment applications. And that's basically what we have been doing since the beginning of the company. And we are supporting quite a few hedge funds and asset managers, et cetera, in this space. So if we look at some of the key attributes of a news analytics data set, we tend to talk about five attributes. Of course, first of all, you have all your different sources coming in. Here I've just listed some, can you say, more traditional types of sources, anything from premium newswire services, Dow Jones, Wall Street Journal, et cetera, into more, can you say, broader web content, as well as social media, blogs, and so on. So when you have identified your sources, you first of all have to figure out what entities, and that's really the first key attribute, what entities are mentioned in the news. Otherwise, you can't really build any strategies around it. You need to figure out what is being talked about and how could those entities relate to something that I want to trade. For equities, it's a little easier because if you see news about IBM, it's very likely going to impact the stock price of IBM. It could also impact stocks that are not necessarily mentioned in the news, and I will talk a little bit about that later in the presentation as we move into some of the more complex thematic, more complex themes that you can build or focus on. Of course, when you look at a global macro, it tends to be a little bit of a harder problem to solve because it's not just news about oil or about the dollar that will move the currency or the commodity. It's also potentially news that can impact the supply or demand side of a given commodity, or just news about the general economy that will impact currencies. So you need to move beyond news, just mention entities, when you go into more of a global, the entity itself, the security itself, when you want to move into a global macro space. The second attribute that we tend to highlight is events. And as you can probably imagine, that's very much key to taking a thematic approach. The RavenPack approach to news analytics is very much driven by an ontology or taxonomy, an event taxonomy. And we work with four layers of granularity. At the very top level, we will tell you if the news is about business, economy, the society, whether it's political news or environmental news. And depending on what you want to trade, the different dimensions may be more or less important. Generally, we find that if you're interested in trading equities markets, first of all, news about companies tends to be more important, but it's generally falling within the topics of economy or business. However, if you move into more global macro type trading, currencies and commodities, etc., you'll start to see, for instance, for commodities, that political and environmental societal news is a key driver, at least in the shorter term, and economic news is obviously also important as you go into longer term investment horizons. For currencies, you typically see that it's mostly economic news that are key drivers. As I mentioned, we have at the very top layer the 5 different topics. However, you can get very granular. We cover more than 2,000 different types of events in the news at the most granular level. And I will talk about in one of the later slides on how to decide at what level of granularity you want to work at, because there's obviously some sort of a trade-off here. If we move on to some of the other key attributes, these cover sentiment analysis. Relevance first. So you can have mentions of entities in the news where the news is not really that relevant for that entity. It's just a mention in the story body, for instance, or let's say it's an article about Apple based in San Francisco. It's not really about San Francisco here. It's really about Apple. However, if you see some sort of earthquake taking place in a particular place, it is really about that place. So you need to kind of be able to figure out the relevance. And one way that we are doing it is not just looking at the traditional approach of location, but also figuring out if we can detect entities playing target roles in an event. So it very much links into our event taxonomy as well. And that is particularly important for global macro. The third attribute, I guess I'm at the third attribute now, is sentiment scoring. And you can have multiple techniques here. We use 3 different types. You could have what we call market response, where you kind of look at the market being an expert or having a view of how particular events are currently being interpreted, whether it's positive or negative. Of course, you have to define some sort of horizon over which you measure that response. We also use something which we call expert consensus, where instead of asking the market, you ask a number of human analysts to say, is this type of event generally considered positive and negative? And whenever we have seen some consensus that would can you say, go into sentiment scoring or form a baseline for a sentiment analytic. And then whenever we can extract any additional information, positive or negative language or numbers from the story, we could augment that benchmark score to push it more or less positive or negative. And finally, you could also take the more traditional technique, just looking up positive and negative language. So having, can you say, sentiment is obviously important, but the last attribute is also very important, and that's novelty scoring. So knowing that something happens, or detecting some event with some sentiment, it's important also to know whether it's actually something that is happening now, or whether it's something that will happen in the future, or whether it's something that happens in the past. Novelty is more looking at happening in the past, but we are moving more and more in the direction of being able to give you more of a temporal view on particular news. But novelty on its own, looking back, whether it's the first time that you have seen the event within a given window, is very valuable, especially as you trade over shorter horizons. There are applications where you don't necessarily want to filter on novelty, because you also get a sense of buzz by including all of the dimensions. However, it's often a useful metric to consider when you want to build your signals. The last thing I want to say to this slide is kind of saying sentiment is, of course, important in terms of being able to pick up on direction and potential strength. But having events available will tell you something potentially about the decay of the signal. And that's really why we believe taking a thematic approach is important, because you need those three dimensions: strength, direction, and decay. Moving on to some of the, can you say, applications for big data analytics in finance, I would say we see a lot of interest in different areas. Here we have focused on 6 different areas. I would say the 3/4 major areas are really asset management, risk and compliance, brokerage and market making, as well as research. In asset management, here you have all of your hedge funds and the more traditional asset managers. People tend to use our data either from an event-driven, event trading point of view, trading more on the shorter term horizons. But we also have a lot of people that aggregate the data into slower moving indicators that they can interact with other types of input in the model. So for instance, there's been a recent paper or report by FactSet that looked at sentiment data combined with, let's say, value or momentum indicators. So for instance, it can be useful to look at, when is long-term momentum running out? Well, it might well be when there is sentiment moving against your signal, at least in the shorter term. Or can we use news to prevent us from moving into a value trap? Well, a company may seem cheap, but it's cheap for a reason, and that is that there's been a lot of bad press recently that hasn't yet been reflected on the balance sheet. So kind of using aggregate sentiment for filtering purposes is very useful for in the midterm and to longer term asset management space. If we look at applications in risk and compliance, we see that that it's very much being used in order to remove, let's say, false positives. There's a lot of human investigation that goes into investigating potential market abuse. But looking at or understanding whenever trading is happening compared to when the news comes out will help you kind of remove some of those flags that you get in an automated fashion, and you can then prioritize your resources to those that seem most critical to look into. And obviously also in market making, people are using it to, and algorithmic trading are using it to slow down or speed up trading or widening spreads or basically pulling or adding more liquidity to the market. And I would say, and then of course I mentioned research as well. There's been quite a big uptake in academia as well. Obviously they're always interested in finding that next data set that will give them tenure, and we have been lucky enough to be part of those kinds of data sets. So we have a lot of academic research that is being produced on our data. So moving into the thematic approach, this is kind of like a different way of showing our event taxonomy. As you can see, you can follow different paths and get more and more granular. This is focusing on earnings and the level of granularity that we have within our earnings group. So the first level of our taxonomy is topics, the second layer is group, and at the very bottom level we have categories. So the most natural step into building themes is really jumping off from the RavenPack event taxonomy. And as I mentioned, there's an apparent trade-off between event frequency and granularity. Of course, the deeper we go into the taxonomy, the more precise information we will get. We will know not only that M&A is taking place, but who's the acquirer and who's the acquiree. Is it going through regulatory approval? Is it a merger that has failed? What is the level of granularity in for that particular event? we will also know, plaintiff, defendant, and so on, and the sentiments around those will be very, very different. However, as you go deeper, you obviously will have less data points to work with. And therefore, you need to understand or figure out what is the right level of granularity to work with. And that can differ across different types of event groups. But yes, first of all, the first type of theme, as I mentioned, is event-driven. Cool. And one of the reasons for why we want to do that, as I mentioned earlier on, is that, well, depending on what type of news it is, the news event, the decay of the signal will be different. It's not just enough knowing, especially as we start to aggregate information. It's not just enough knowing that it has a positive score of 30. A 30 in one group may not be the same as a 30 in a different group, simply because some information gets incorporated faster than others. For instance, if you look at positive analyst ratings, it tends to get incorporated very fast, but negative analyst recommendations will decay more slowly. And as you go into earnings, it may also be different. And it may also differ across different market capitalization stocks. So not surprisingly, information gets incorporated faster for large cap stocks than it does for small cap stocks. But again, depending on the type of event. And that is really why you want to take this event thematic approach. It allows you to basically treat the news in a non-uniform way. And that is the key. And you can then, of course, go deep and measure the direction of sentiment or volume within each of those buckets or themes that you built. So in some of our research, and this is kind of where we move into a little bit of a use case, a simple use case, in our most recent paper, we kind of started off with this thematic approach. And it's something that we are very much working with at the moment and trying to sophisticate this kind of way of thinking and the framework that we're building. And we basically look at a three-step procedure. So the first step is trying to build up a set of indicators. But instead of saying there is just one sentiment score per company per day, well, you can have multiple sentiment scores, one for each of the themes that you might identify. And that will allow you to kind of, in the first step here in our research, just say, let's just measure in isolation the effect of earnings, companies that have earnings news. When we go to the second step, which is our alpha streams. So we basically create a set of alpha strategies per theme to try and isolate the effect of just that particular theme. Of course, we want to expand on that and say, what if you see certain themes co-appearing? Does that give you a different impact than if you see a particular theme occurring on its own? But first of all, defining these themes allow us to do this type of analysis. But first of all, we create a set of indicators on a daily basis. We kind of split it into the event groups. So we work at a slightly higher level in order to get enough data points for that particular indicator. We split it up into positive and negative news because we also find that the impact of positive news is different than negative news, as I mentioned, also in terms of its decay, but also generally in its impact. So we want to be able to model those two sides differently or in isolation. We then, as I mentioned, create a set of alpha streams, and we look at three types of alphas or a family of alphas. First, we look at the different event categories, so the event themes. We then look at different investment horizons, and we then look at only tracking a short leg and a long leg as well as the actual spread. Because it may be that there are situations where the long leg on its own, if you look at it in relative to the market, that you don't have such a strong results such that you start to struggle a little bit in getting a statistical significance. But if you look at it more from a spread point of view, well, you actually know that the positive sentiment stocks will outperform the negative sentiment stocks. You can get some statistically significant movements from a spread perspective. So that's why we kind of also include the spread, but we still want to be able to also pick up on only the short leg and not trade the long leg for certain themes. So we end up with a large set, also for different investment horizons. In this particular study, we ended up with about 2,000 potential alpha streams. The first filter is then driven by looking for statistical significance over some time period, and that will kill a lot of the alphas. So we may end up with something like 400, but it can change or differ over time depending on also what environments you're in. Just to provide an example, something like layoffs tends to be a very strong negative signal in a negative environment, but it's more neutral to slightly positive in a positive environment. So here in a positive environment, people are perhaps interpreting it more like a proactive cost-cutting measure, but in a negative environment, it's definitely seen as a bad sign that people are laying off employees. So we have all of these different alpha streams and the alpha strategies that we, in the end, want to combine into a super alpha. In this particular paper, we did it in a very simple way. We basically ignored all potential covariances, benefit that there might be, diversification benefits, and we simply just did an information ratio weighted strategy. However, we are moving more towards perhaps creating some alpha streams, doing some clustering amongst our alpha streams before we move into some sort of optimization at the super alpha level. And that's really the last part. And one of the benefits that you have moving into or using with this type of process and ending up with a super alpha is that you can take any alpha that you have produced. It doesn't really matter what it's driven by. You just end up having a time series of returns or a prediction for that particular alpha, and you have a number of constituents. And what you do in the super alpha is combining all of those views and being able to cross internally. And we tend to find that will help you reduce the turnover of these type of signals. What was that? There. So taking this relatively simple approach, this is kind of the return profiles that we got. We have split it into large cap and small cap, US and Europe. Generally, we find that these type of strategies works slightly better in Europe than in the US, but they perform relatively, they're kind of moving in the same ballpark. So if we looked at Russell 1000, we were able to achieve an information ratio of about 2. Going back to 2007, and I think the last data point here was September. We did it up through September 2015, so it's fairly recent. These numbers that are shown here are pre-transaction costs, and there is about, on average, 2 to 3 day holding periods. So we are talking about 40 to 50% daily turnover. So they are still relatively high turnover signals. And for small cap, we got quite attractive levels with more than 4, but of course a lot of that will be eaten up by transaction costs. But it's kind of just showing that if you take, and I think that's a very good benchmark, that if you just take an average value across all sentiments and ignoring the thematic approach, just taking an average sentiment across everything, and you trade based on that, you can get similar type of information ratios for small cap. However, you tend to struggle a little bit more in large cap, where you tend to you need to be a little bit more sophisticated in getting the alpha out. But what you get from this approach is that you get something which has lower turnover. So you may have gotten, let's say, if we focus on the small cap, about 4 in simple approach, you kind of get perhaps 95% turnover instead of 45 for small cap. So one of the main advantages you get in the small cap space is that lower turnover from taking the thematic approach. But there are other things you can do. So this is, can you say, the first step, the most obvious step in looking at a thematic approach. But a different types of theme could be a relationship theme. And we are very much interested in this space and are moving into building networks from news. And I think that's a very natural step to take next, and something that will also help you create even lower turnover signals. because you basically can put in more and more alphas. And you also have a greater likelihood of having signal overlap from one day to the next when you're not only trading on the news on the company itself, for instance, but also news on related entities. And of course, there's been quite a lot of research that have gone into looking at supply chain and information, and FactSet has some quite interesting data sets in this area. And of course, sector classification has been used quite some time, and there's also, more recently, there's been some more granular sector classifications out there. But what you tend to see with those type of data sets is that they're relatively static. So it's often extracted from regulatory filings, and it tends to be only when there is at least a, 10% dependency in terms of revenues from a particular company. It's definitely valuable information, but what we are trying to achieve looking at the news is, can we make it more dynamic? So looking at how often are entities mentioned in the news together, you can get an idea of whether a relationship is growing weaker or stronger over time. And also potentially you're able to pick up on new relationships forming in a more timely fashion. In that if you are able to detect a company signing a new business contract with someone that it hasn't been related to before, well, there's a new supply chain relationship emerging. Or if you have a business contract termination, perhaps I need to cut that supply chain relationship, etc. Or there could also be kinds of relationships that are temporary in nature, like an M&A. So as soon as you see the first bid coming out, or a rumor or something about an M&A, it may be that the stock prices of those two companies tend to correlate more. But as soon as the merger is being rejected or having been completed, that will also change the picture. So there's a lot of different things that are interesting. And as I mentioned, it will significantly improve signal coverage and turnover. And I think that's very attractive when you look at this type of stuff. And of course, we're also very much interested in networks when you look at macro. You might get an idea of what's going on in the geopolitical landscape. So for instance, one example that I tend to take out is Ukraine. If you look at the conflict with Russia, you didn't really pick up, when you just look at all the news for Russia, you didn't really pick up on the conflict with Ukraine. However, if you started to take the thematic approach and looking at the news coverage that mentioned Russia and Ukraine in the same news stories, it became very apparent that something was going on. But actually, you also saw big news spikes for the US and Europe. But when you started looking at the event themes that drove the relationship theme, you could see that it was much more passive for the US and EU. It was about economic guidance or sanction guidance and so on. But when you looked at the news that mentioned Ukraine and Russia, it was about diplomatic recalls, civil unrest, war conflicts, airspace violations, and so on. You could see it was much more aggressive. So you can start to pick up on these geopolitical aspects. You might even go into saying, is Spain being co-mentioned more with Greece or with Portugal, or is it starting to move it away from it, giving some indication that it's being seen as going through a stronger, recovering more strongly than some of the other economies? Is it being dragged back in now that the Brexit was hot again? So there's a lot of interesting things here. And also, just to finish off, as I mentioned, it may also give you an idea of how to link news with given commodities. So just to kind of finish off, when we talk about big data, and I just wanted to finish off with some of the things that we are currently looking into and which we think is very exciting. Of course, we will continuously expand our source coverage and also beyond more traditional news. So some of the things that we are working on is going to pre-news. So going into the actual regulatory filings, going into the actual analyst or earnings reports to actually being able to dig out all the different elements that could be moving prices we might look into footnotes, etc. You could obviously also go into digital footprints, which is also a very interesting source of potential alpha. And then, of course, one of the things that we also would very much like to do is start analyzing clients' own proprietary content and help them understand how their information, first of all, making it more easily available for them, but also understand how their information sits relative to public information. Do I really sit with a competitive edge on some of the information that I have in-house as compared to what's broadly available out there? Of course, that puts extra pressure on technology, and we are expanding our event detection capabilities beyond headlines, which has been the main focus of our approaches up until recently. But we are moving much deeper into the story body to dig out all of that information. And as you move into story body, as I started off saying, you have to really focus more on temporal scoring. There is kind of like today's headline becomes tomorrow's story body, but it's not just that, because that's something to do with novelty. You also need to look at, when you go story body, there's a lot of benchmarking. So it may say something about Google's earnings this year is so much better than, can you say, Apple's earnings 1 week ago. Or it may say much better than Google's earnings last year. Depending on how it's being mentioned in the news, you don't want to pick up on earnings up in one, and then a little bit later down the story you would have an earnings down, but the earnings down is really about the earnings 1 year ago. So you need to be able to handle all of these benchmarking type situations, and therefore temporal scoring becomes important. One example could be as well, the United States president was killed, but you really realize that it's a story about Abraham Lincoln. So those are some of the things that you do want to take care of. And then, of course, also very interestingly, I think, is that we plan to expand our entity detection or entity coverage to include people, products, services, and brand names as well. And that, again, opens up for new types of analysis, looking at influencers and opinion makers, and also looking at consumer sentiment, which we believe is important if you want to do Twitter. So people are not necessarily talking about Apple as a company, but they may talk about the products of the company. So I really love the new iPhone, not the new iPhone from Apple. So if you want to pick up on consumer sentiment, you have to track the products that they use. And those are, can you say, the key things that we're looking into these days.
Great. Thank you, Peter. We are a little short in time, but if we have one question, we probably could fit that in. Yes? We'll bring a mic to you in just 1 sec.
Hi. I have a question for you. Is about how do you deal with the language barriers when you are analyzing data? Particularly, have you done any work with regards EM equities or only US European? It's more or less the same question, but I mean.
Yeah, I would say in terms of the entities that we cover, we're global. So we cover more than 38,000 different types of entities. But right now, we only analyze English language news. So we rely on, can you say, the capabilities of Dow Jones to can you say, put out important news in English. And they do have a lot of, can you say, offices around the world and push news out in multiple languages at the same time. But of course, and that is also something that we are aware of and is on our agenda, that for certain countries, it may be more important than others to also being able to pick up local language news. So it's definitely something on the agenda, but right now we're English language based.